Ladies and gentlemen, good day and welcome to the Jai Balaji Industries Limited Q4 FY24 earnings conference call hosted by Go India Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Sana Kapoor from Go India Advisors. Thank you, and over to you, ma'am.
Thank you, Raya. Good afternoon, everybody, and welcome to Jai Balaji Industries Limited Q4 and FY24 earnings call. We have on the call Mr. Ajay Jajodia, Chairman and Managing Director, Mr. Rajkumar Sharma, Chief Financial Officer, Mr. Vijay Bazi, President Finance, and Mr. Ajay Tandya, Company Secretary. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risks that the company faces. May I now request Mr. Aditya Jajodia to take us through the company's business outlook and financial highlights, subsequent to which we will open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Sana. A very good afternoon to everyone. We are very pleased to welcome you all to our Q4 and FY24 earnings call. Our investor presentation and results have already been uploaded on the exchanges, and we hope that you have had the opportunity to review it. As you may be aware, Jai Balaji Industries is an integrated steel products company specializing in value-added products like ductile iron pipes and specialized ferroalloys. Our journey has witnessed a remarkable turnaround driven by the resilience and hard work, leading to record-breaking performances. With Jai Balaji 2.0, our goal is to boost margins by focusing on revenue growth from ductile iron pipes and specialized ferroalloys, and implement cost-cutting strategies, operational efficiencies, and also achieving a net debt within the next 15 months. FY24 has been a very eventful year for us. We've achieved record high financial performance, marking the highest ever in the history of our company. Before discussing the financial and operational performance, I would like to highlight the following. Strategic updates of FY24. Net debt free in the next 15 months. The company is making significant progress in its net debt reduction strategy. In FY24, the net debt decreased to rupees 398 crores from 871 crores, marking a reduction of 54%. It's worth noting that our current net debt to EBITDA ratio stands only at 0.4 as of March 31st, 2024, thus performing better than our guidance of maintaining 0.6 net debt EBITDA. This debt is associated with Tata Capital Limited, and we are optimistic that within the next 15 months, we will achieve our goal of becoming a net debt-free company. To update you all on the capacity expansion and the capex plan of the company, we had earlier announced a capex plan of around 1,000 crores, and out of this, around rupees 497 crores has already been incurred, and the balance 503 crores is expected to be incurred in the next 15 months. All this capex is being done through internal accruals only. I am extremely delighted to share that we have made a significant improvement towards achieving our capacity expansion plans. Capacity of DI pipes has been expanded 3 lakh tons compared to 2.4 lakh tons last year. Furthermore, 1.4 lakh metric tons, that is the balance of phase 1, and 2.2 lakh metric tons, that is phase 2, is expected to be commissioned in FY25 and FY26 respectively. The capacity of ductile pipes will finally reach 6.6 lakh tons in the immediate future. The ferroalloy capacity is also being increased from 1.3 lakh tons to 1.66 lakh tons. The balance capacity of 0.24 lakh tons, is expected to be commissioned by FY25. In the blast furnaces, one of the blast furnaces has already been commissioned, and hence the capacity has expanded to 6.3 lakh tons, up from lakh tons of last year. The completion of the second blast furnace is anticipated by the next financial year. Additionally, the capacity of sinter has been raised by 3 lakh metric tons to 9 lakh metric tons, with the remaining 3 lakh metric tons slated for commissioning in FY25. For more information, please refer to slide 13 of the investor presentation. I would want to highlight here that we are focusing on enhancing capacities for ductile iron pipes and ferroalloys because we believe that there is a very strong demand in these sectors. We expect that the DI pipe industry to go at 13 to 15% CAGR in the near future. The Jal Jeevan Mission and Mission Amrit Sarovar Infrastructure Development Plan, which has been promoted by the government, has led to an increased demand of these pipes, and Jai Balaji is also contributing to the same. Currently, we have around 9 to 10% of the ductile pipe market Currently, we have around 9 to 10% of the DI pipe market share of India, and our aim is to reach 18 to 20% of the market share post our capacity expansion plans. We also manufacture special grade ferroalloys, which is sold at significantly higher premiums to the benchmark ferroalloy prices. We are one of the largest producers of specialized ferroalloys in India and export to more than 40 countries in the world. The company is also focusing on cost reduction measures through enhancing operational efficiencies. This includes owning 3 railway sidings and having captive power facilities. Now, coming to operational performances. For FY24, the production of TMT bars, ferroalloys, and DI pipes showed an increase of 18%, 12%, and 14% to 2.5 lakh, 1.2 lakhs, and 2.4 lakh tons respectively. The sales volume of TMT bars and DI pipes showed an increasing trend of 22% and 14% year over year to 2.5 lakh tons and 2.4 lakh tons respectively. We also saw an increase in exports of special grade ferroalloys to around 40 plus countries, with more than 50% of these being exported to key European, American countries and Japan. Realization of both ferroalloys and DI pipes increased significantly to rupees 1,76,000 tons for ferroalloys and 77,000 rupees per ton for ductile iron pipes, which is an increase of 28% and 12% year over year. The production of ferroalloys and DI pipes increased 19% and 6% year over year to 33 KTPA and 69 KTPA. Sales volume from them was similar to the volumes in Q4 23. Realization of ferroalloys and ductile pipes showed an increasing trend of 23% year over year to 1,88,000 tons and to rupees 83,000 tons for pipes. We are also thrilled to share that Jai Balaji has achieved its highest ever revenue, highest ever EBITDA, and highest ever PBT and PAT for this financial year. Revenue for this year increased by 5% year over year to rupees 6,414 crores. 175 crores, up 71% year over year. EBITDA margin also increased to 15% compared to 9% last year. PAT also showed a very significant increase of 1,422% to rupees 880 crores compared to only rupees 58 crores on last year. Similarly, PAT margin showed a jump from 1% in FY23-24 to 14% in FY24. Revenue for the quarter increased to rupees 1,846 crores, up 7% year over year. The adjusted EBITDA showed a slight drop of 3% to rupees 257 crores year over year because of certain provisions taken in the books in this quarter only. The PAT increased significantly to rupees 273 crores, up from losses reported in Q4 23. The PAT margin also grew to 15% from -1% in Q4 23. Overall, the performance in FY24 has been outstanding, and we at Jai Balaji are ready for the next financial year. For FY25, anticipate revenue growth in the region of 25 to 30%, EBITDA margins of around 17 to 18%, and the net debt to be reduced to a range of around 225 to 250 crores. The capital expenditure is also expected to be in the range of 300 to 250 crores, and we expect our ductile iron pipe production to exceed 4 lakh tons. With a focus on increasing the contribution of value-added products for margin expansion, we expect DI pipes to contribute 45 to 50% and ferroalloys to contribute around 35% of our total volumes by FY25-26. In conclusion, I am very confident that Jai Balaji Industries will continue to grow as a resilient organization with a very strong growth trajectory. We can now open the floor for questions, please. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. The first question is from Jatin Damania from Swan Investments. Please go ahead.
Good afternoon. Thank you, sir, for the opportunity and congrats on a good set of numbers. So firstly, on your two segments, DI and Ferro, where we are expanding capacity and we are confident that the industry is likely to grow in a healthy double-digit growth. But can you throw some light in terms of what was the EBITDA per ton in both these segments in Q4 vis-a-vis Q3, and how did we end at the financial year FY24? Hello?
Can you please repeat the question? You are not audible.
So am I audible now?
Yeah, now you are audible.
Yeah. So we just wanted to understand the EBITDA performance, EBITDA per ton for the ductile iron and the ferroalloys in Q4 vis-a-vis Q3. And given the strong growth that we are seeing in ductile iron, where our major competitors are also increasing the capacity, how do we see our profitability panning out in the FY25-26 once your capacity comes on stream?
Yeah, answering your second question first, the competitors are expanding capacity because the demand projections over here in India for the next 5 to 10 years, it is extremely robust. And there is a huge scarcity of these pipes in the country because of the huge infrastructure both that has been planned. So keeping this in view, many of the competitors also would be expanding capacities. So naturally, as we had mentioned, that we are having a current market share of around 9 to 10% only right now, and we want to increase it to around 18 to 20%. So keeping this objective in view, we are expanding our capacities. One thing I'd like to add over here is that when we compare ourselves to the cost, so in terms of cost, our facilities is one of the most integrated in the ductile pipes amongst the country. Means we have everything, we have all the facilities located in a single location, and our cost structure is very conducive. So in the cost quartile, we are one of the lowest producers in the cost quartile. And even in the realizations, our realizations are slightly higher than our peers because of, I will say, because of timely deliveries, because of better quality, and because of very personalized service by our marketing teams. In terms of margin, you asked, means in percentages, in ductile pipes, we have a margin of around 22%, and in ferroalloys, specialized ferroalloys, we have a margin of around 25%.
And this margin is expected to sustain?
Yes, this margin absolutely are expected to sustain. Because as I also mentioned, is that other than expanding the capacity, what we are also doing is that we have also undertaken many cost-cutting measures, which are there in slide 13. You will see that. So in this cost-cutting measures, the capacity of the blast furnace has been expanded. The capacity has been expanded, keeping in view that the coke rate will be reduced, the fuel rate will be reduced. Also, center plants have been added. Also, we are adding a substantial capacity of green power to the waste gas of the VFG, etc. So the cost also has been cut down, and with increase in volumes, the overheads also will come down, marketing expenses will come down. So when we take all these aspects in place, so the margins will be in the region of 18 to 20% for the group as a whole.
So, sir, when you said about the cost-cutting initiatives that you have taken and you are setting up the railway sliding and the captive power plant, so incremental, how much cost saving that we can see into the overall company? Once the both
incremental, what we're talking about is that on the metals produced entirely, we are looking at a cost saving of approximately 3,000 to 4,000 rupees per ton on the hot metal.
On hot metal. And sir, one more question on the ductile. When you indicated that the margin is around 24%-25% the ductile iron, what was the same in the last quarter, Q3?
Q3, the margins must have been in the region of around 3% to 4%. Around 20-21%.
Okay, so we have seen almost 300 to 400 bits higher in this quarter. And sir, last question is on your employee cost for FY24. Now, if you look at the overall costing in employee cost has increased by almost 20%. So, what was the main reason behind that?
What happened in the first 3 quarters, the projects which were being capitalized, the expenses of the employees were not transferred over there. The entire, once the capitalization were done, approximately 8 crore rupees capitalization was taken out of the employee cost and it was capitalized. Therefore, this quarter the employee cost is lower by 8 crores.
Okay, but this run rate will continue going ahead?
No, it will be in the same region. In the annually, if you compare, it will be in the same range.
Sure, sir. Thank you, sir. If I have other questions, I'll come back in the queue. And all the best.
Thank you. Participants who wish to ask questions, please press star and 1. Next question is from Shweta Dikshit from Systematics Group. Please go ahead.
Hello. Thank you, sir, for the opportunity. Question is regarding the EBITDA per ton margins. I mean, could you reiterate the margins for DI pipes and ferroalloys for the quarter in terms of EBITDA on a per ton basis? Also, post-expansion, how are we looking at the margins evolving? Like by FY26-27, what can be the EBITDA per ton expected out of these segments? And I missed your guidance for FY25 and 26 for the segments, volume guidance. Could you please repeat that? Thank you.
Madam, as we just said, is that the margins in the ductile iron pipe would be in the region of around 20 to 25%, 22 to 25%, and in the specialized ferroalloys also 10%. In terms of volume guidance, for ductile, we are looking to produce around 4 lakh tons in the forthcoming year. That is FY25, and in FY26 we are looking to produce around 6 lakh tons. And as far as ferroalloys is concerned, we are looking to produce around 1.5 lakh tons in the forthcoming year. With the capacity going up to 1.9 lakh tons, we expect to produce 1.8 lakh tons in the FY26.
And so, what is the outlook on, how the steel prices have, remained range bound, barring some uptick in the prices in this quarter. But if the prices fall further, what's your view on it? Will we still be able to, maintain margins, or what could be the impact of that?
But one thing I like to One thing we would again like to emphasize is that we are making steel products now. We are now no more of a commodity company by and large. As we mentioned earlier in the presentation also, that see our sales of specialized products was only 25% 2 years ago, which has increased to 50% this year. Going forward, we are looking to raise it to 85 to 90%. So basically what we're talking about is that we are making products out of steel, which we are manufacturing in-house. But we are no more a commodity player. So as such, if you are saying that the prices of the commodities going up and down will not be impacting the margins, maybe there will be a long-term adjustment in the final prices of the finished products, depending upon the cost of production of steel or the sale prices of steel. But then the margins will remain impacted more or less.
Okay, thank you, sir.
Thank you. Participants who wish to ask questions, please press star and one on your touchtone telephone. The next question is from Siddharth Jain from Yes Securities. Please go ahead.
Hi, good afternoon, sir. Firstly, congratulations. A couple of questions from my side. So you have already mentioned your guidance for FY25 in your presentation, but if you could just give us some more details on the same, that would be helpful. And if you could guide on your ferroalloy production numbers for FY25.
I'll answer you about the ferroalloy special grade. This year we have completed with a production of 34,350. The special grade, and the normal grade is 81,000. Okay. And what was the first question?
So, and what would be your production number for FY25? Any guidance on that?
In ferroalloys, we'll be increasing capacity by around 30,000 this year. So roughly the same level of capacity utilization. Last year we achieved around 76%. We'll achieve the same level.
All right. So my second question is, can you give a breakup of so the breakup of your normal grade ferroalloys and your special grade ferroalloys will also remain the same going forward?
Yeah, we'll try to increase the special grade ferroalloys. That all depends on market and the demand, which is currently being increased. It is showing an increasing trend.
Got it. But any targets that you have internally?
Exporters out of India.
Got it.
As I said what Sharma is saying, what is happening is that the special grade of ferroalloys, which is a very new product for India as a whole. What has happened is that to establish the market, it has taken us more than 4 to 5 years. Currently, we are exporting to 40 countries. And with the passage of every month, every quarter, the confidence of our buyers, it is increasing multifold. So currently in our mix, whatever mix we have given you, is that in this mix, the contribution and the share of specialized ferroalloys will be continuously increasing because the customers have potential to buy more. But many customers are still not buying 100% of the requirement from us because we are relatively new suppliers to them. Because we are the only exporter out of India for these products. So they need to establish some more confidence. It will take a couple of more quarters, 3 quarters more. So it's not a one-day match. It is a long haul. So here also the share of the specialized ferroalloys will be increasing Q and Q.
Got it, sir. And lastly, sir.
One more thing we'll have to add over here is that the sales of the specialized ferroalloys has increased 80% over last year.
Got it, sir. Noted. And so lastly from my end, so as you've mentioned that there's 1,000 crore capex that you'll have planned for the next 15 months. So anything post that, any other capex plans that you all have on the table or any discussions that you can help us with post the 15 months with 1,000 crore capex?
See, what is happening is that currently the management is very focused to complete this particular capex plan. So as of now, we would not like to give any guidance on further capex till the time these particular projects are completed and the company is able to reap the fruits and the benefits of this particular capex. We will not be in a position to do any further capex. So as of now, there are no further plans immediately.
Okay. That was helpful, sir. Wish you all the best. Thank you.
Thank you, sir.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to ask questions. The next question is from Parth Modi from Equirus Securities. Please go ahead.
Hi, sir, and thanks for the opportunity and congratulations on the great set of numbers. I had only one question, that why the other income has gone so up, and can you please give us the breakup of the same?
If you see our last balance sheet, there was a a lot of provisions which we had made, and those provisions have been reversed. Those were not required, and the other expenses also has gone up. So certain provisions have been made into other expenses, and these provisions have been clubbed into other income as per accounting.
Okay. Okay, sir.
Thank you. To ask a question, please press star and 1. Next question is from Yogesh from Autumn. Please go ahead.
Kapil sir, am I audible?
Yes.
Yeah. Sir, just on to understand the DI pipes basically. So as we know that we are an integrated player in DI pipe. So just wanted to know, and on an EBITDA per ton basis, what would be the difference between a non-integrated and integrated player in the DI pipe segment in terms of EBITDA per ton?
The difference could be as high as around 8 to 10%.
Okay, 8 to 10% between an integrated and a non-integrated.
Absolutely.
And we have about 9 to 10% market share in the DI pipe segment. So how much of the total industry of DI pipes in India would be non-integrated players?
Can you please repeat your question?
So we have a market share of about 9 to 10% in the DI pipe segment in India. So out of the total universe of, out of the total industry of DI pipe in India, how much would be contributed by non-integrated players?
See, integrated and non-integrated would also have different levels of integration and non-integration. So what I would like to say is that when what we can mention is about our company is that our facilities are fully integrated and they are all integrated at the same location itself. So that also gives a very big advantage. For example, there could be players who are integrated but they have the integration at some other location where there would be a fair disadvantage. So the different players would have different levels of integration. So different types of integration. But if you talk about total integration at a single location, ours would be one of the very few companies.
Okay, so how many, what would be contribution of such players to the overall industry where they are integrated at one location only? So what would be their contribution or out of the total industry?
It will be around 50%.
50%. Okay. And sir, one more observation, like if I compare TMT with DI pipes, TMT, we see a fall in realization of about 16% YOY and again 2% on Q1Q basis, while DI pipes, there has been an increase of 23%. So what is the different dynamics playing in both this TMT versus DI pipes?
We will explain. TMT basically, this is exactly what will be, after the question, this is exactly what we will tend to emphasize. TMT is a segment which is being made by hundreds of players in the country. So it is a pure commodity segment. So the steel prices, they have softened since last year. So that is why the realization has TMT. So the commodity prices have come down, TMT prices have, they have also come down. But in the case of DIP, since it is not a pure commodity play, but a niche product play, value-added product play, yet the prices have actually not come down and they've increased. Reverse again.
Sure, sir. And so what would be the EBITDA per ton in TMT segment? If I can get a range in TMT segment, what would be the EBITDA per ton?
TMT segment, the EBITDA would be ranging in different quarters, ranging between around 7 to 10%.
Okay, 7 to 10%. And sir, lastly on the realization, so DI pipes, the realization increased in 1 year about from 68,000 per ton to about 83,500. And so do we expect sustaining around current levels or it will try to revert to where it started from?
See, the order book which we have in hand as of now and the demand projection which we are seeing, what we are looking at is that we should be able to maintain this guidance. There may be a correction of 2 to 3% in the prices.
Sure. And so lastly on the also on the realization, so